What is going on, everyone? Welcome back to DXB Crypto. Hope you're doing well. Of course, as always, smash a like as the Fed finally ends quantitative tightening. And we want to look at this from several angles. So this is a video you don't want to miss. First of all, let me give you the backdrop. We were coming into a weekend of sell the news and, of course, a lot of fear, mostly driven by stablecoin Tether's weak downgraded rating by Standard & Poor's. In addition to that, MicroStrategy and Sailor came under immense scrutiny after the company announced that they were building a $1.4 billion reserve. The number wasn't an accident. And let's start with the FUD first before we go to Chairman Powell's exit strategy as he winds down his tenure by announcing the end of quantitative tightening. So basically, the shares have been falling since, I would probably say since back in July. And their dollar reserve came under scrutiny and they announced it. They did say they were willing to sell Bitcoin. However, the market took that and ran with it as always. Strategy shares have been having massive issues. But the key focus here was what really drove the markets over the edge was the fact that Strategy on Monday said it has created a $1.44 billion reserve, and that is just a double of their $744 billion due dividends, right? So their dividends are coming in, and they've obviously just doubled that number. In my opinion, at the last 12 months of dividends, growing to eventually 24 months and more for payouts. So they're just calculating what could happen. And again, I don't think Michael Saylor and Strategy collapses on the back of any pressure like this. But one thing you would know is what they've done with the Strategy token itself. I mean, not the token, the shares. So Strategy has been falling, since, 2024 to 2025 peaks in the summer. You could see here, but it has been falling. Now, what they've been doing is they've been selling. Their strategy is to sell basically the Strategy shares and then pay their dividends whilst buying Bitcoin. So I'm not worried here, but I am worried about the likes of NACA and other small, Bitcoin treasury companies that will come under pressure. So this was the back of what we came into overnight, Sunday, exactly midnight. And also it could have been algorithm based as well. If you look at the crash, midnight, everything on 1st of December reset. Of course, the main anticipation was Fed Powell's exit speech. Not exit speech, but in terms of the announcement of the QE. Now, in terms of the Republicans, they absolutely hate this guy, right? The pressures in the economy remain the same. Have a look at this.
Created nothing but a problem. And very obviously, Jay Powell was fixated on politics when he had the supersized Kamala cut right before the election last year in September. That was just utter horse manure.
So, Taylor, I think, you tell me if I'm wrong, but I think you got
You also have the next Fed chair, which is likely to be Kevin Hassett. If you look at the various different Feds that came out in support of Hassett, so there's a lot going on. But I think he goes out absolutely fighting here. There was a bit of hawkishness, there was a bit of dovishness, but overall, he criticizes Trump and he attacks him as almost like a centrally planned economy, or what we would consider as an economy from a communist state, without actually saying those words. So it's interesting. Let's listen to Powell.
So I've been an admirer of George Shultz since my college years. I saw him then and now as a great role model. As I mentioned,
make no mistake, this is a legacy protection move by Powell. Very, very smart. George Shultz is a Republican giant, all right, an economist of colossal standard amongst Republicans, and Reagan's. I think he was the Reagan's finance secretary or whatever he was at the time. But the fact that he's obviously aligning himself with people like Volcker and Schultz Volcker was a lot more hawkish because he kept rates higher for longer. But this is this guy protecting his legacy, of course, doing what he has to do right now to take shots without directly taking shots.
Just a few months ago, when delivering the baccalaureate address to Princeton's class of 2025, 50 years after my own graduation. As I told the graduates, when I faced the world after college, I had no real plan, but I knew that I wanted to combine a private sector career with public service. And I had in mind a few well-known public figures of the era, especially George Shultz, who by then had left to go to Bechtel, whose picture, as I recall, was on the wall of the Princeton Eating Club, of which both of us were.
Yeah, he was Reagan's Secretary of State and legendary Labour economist. But what's important here is basically this is all about centrally planned economy. And I haven't heard that unless I'm referring to a communist dictatorship, a centrally planned, the Politburo of the Soviet Union. And that's actually a quite harsh take on the, that's definitely shots fired about tariffs and stuff like that. So in summary, basically, free market, what he's saying here is free market beats centrally planned markets. He praises Schultz for removing wage and price controls in the 1970s. He emphasizes how the government-directed investments always felt centrally planned. He quoted, right, "People will do what's best for them, which collectively leads to the best outcome." Now, the Volcker doctrine is way more aggressive in my opinion. Schultz backed Volcker's aggressive rate hikes. We know that, of course, Schultz is a hero of Powell. Volcker had the balls to crash inflation despite political pressure. And if this guy is talking about this, well, take care, sir. See you later. Now, he said it sets up 40 years of disinformation. Again, he's going into fight there. Decoding Trump criticism was a little bit more obvious for me, okay? And this is where it gets really spicy because he's protecting the reputation, but at the same time, the tariffs, he basically talked about that as a massive price control and problematic for equilibrium. And it led to a recession in the 1970s, he says. Powell said that there are still some issues left to learn from Schultz. Of course, hint, wink, wink, tariffs. Government-directed investments, we talked about that. He criticized any form of central planning. He said that the government should only intervene in extraordinary circumstances like the pandemic and transition to basically stop kicking winners and losers. He said, look, stop picking winners and losers to Trump, which is crazy. Like he's obviously got the balls. Economic nationalism, praised efforts to bring free markets to places like Russia. He emphasized global free trade as a key principle, and of course, complete opposite to the America first. He's more of a globalist, guys, not America first. So this was an incredibly, I think, he's going out to protect his legacy. Why? Because, ultimately, what does this mean for the market, right? If he's protecting his legacy and he's positioning himself in a light or kind of akin to Volts and Schultz, Volcker and Schultz, sorry, I should say. So basically what's happening here is hawkish lean. So December rate cuts, and of course the odds stand still at 87%. Now, in addition to that, the liability, the general trading account here doesn't really show you the full picture, but it does actually paint what is about to happen, which is a fall of this chart from $1 trillion as they stop hiking quantitative or as they end quantitative tightening. So every time this chart drops, I keep saying the same thing. You get a bull market, you basically get a huge rally. Every time this hikes, you get BTC doing the opposite. Okay, so BTC drops when this chart comes here, and BTC absolutely blast off when the chart is here. So it's almost like this chart is pretty hiked up for the drainage, and we need to see this chart coming down some more. Okay, so the Kevin Hassett factor. Trump likely to announce Kevin Hassett as Fed chair this week. Powell's term ends in May 2026. Hassett's first FOMC is going to be June 2026. 7 months of potential White House conflict with the Fed, but I don't think Powell will be ready for that. I think he will just quietly protect his legacy and keep it moving. So he's clearly setting up his legacy, of course, as a defender of Fed independence like Volcker before him, and that's not good for us. Stanford's speech was way of laying down his economic principles before transitioning. Okay. And this is, so how do we trade this? In my opinion, expect volatility around the Fed meeting. This is going to be the fact that he mentions the likes of Volcker and other Republicans, especially Volcker, who is very incredibly hawkish. Now we understand who this dude is after all, of course. So yeah, we have seen a little movement here off the bottom around $87,000. And again, the dollar strength on hawkish Fed, crypto consolidation, very likely around these areas, but 2026 should be fireworks. And the bigger picture is to be, I think Kevin Hassett is way more dovish, of course. If he's aligned himself with Republican heroes like Schultz, Friedman, and Volcker, then this guy is all about the business of being incredibly balanced, in my opinion. I think he's done well considering the tremendous pressure that he's been under. But of course, like anytime you see Volcker there, you should be very, very concerned of that kind of rhetoric. But end of QT, just to give you a summary. Okay, so we know fundamental problems. We know the FUD, we know Tether, we know why we've been crashing, historically low volumes. We know all of that, right? So normally, if you want to look at, I don't want to play the whole video for you, but if we look through what basically he said, we can just come to the conclusion here very quick. Okay, so if you look at this, our long-term stated plan was to stop the balance sheet runoff when reserves are somewhat above a level we judge consistent. With ample reserve conditions, we may approach this point in the coming months. We are closely monitoring the wide range of blah, 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 right? Typical Powell. But this is bullish. This is really bullish. What takeaway here for me is the coming months. What are the coming months? They are 2026, my friend. So in practice, what it means is central banks will stop reducing its holdings of treasury mortgage-backed securities, maintaining the size of its balance sheet to the current level. Balance sheet reduction and quantitative tightening pulls liquidity out of the financial system, of course, as always. And if it does that, then what happens is the chart that I was showing you, that does the opposite to what the markets do. When that chart goes up, which means they are pulling money out, or QT, and that's what's being ended now. The markets do crash when that chart goes up, okay? So this is no more, guys. They are no longer going to be draining the account, okay? Now, we can see here exactly what Powell said. And he says here, some signs have begun to emerge that liquidity conditions are gradually tightening, thereby necessitating the end of QT. Hallelujah, guys. Hallelujah. 2026 will be absolutely insane. All the, all those idiots who just plan for tomorrow, they're not going to see this. They will sell their bags and leave. That's okay if you sell. It's okay if you took my sell signal back in the height in July and August. And if you sold as well, that would be, you'd be in decent profit now. Anyway, so let's continue. So Powell, he did not provide specific timeline for ending balance sheet runoffs. However, it's ended, all right? They said that a month ago. And I thought this was specifically, he says the next few months. He also hinted that there are more interest rate cuts are in the cards, and he alluded to the tightrope of the central banks. And in particular, what he said here was, if we move too quickly, then we leave the inflation job unfinished. And of course, it will come back to finish it later. If we move too slow, there may be unnecessarily losses, painful losses in the employment market. So Fed balance sheet, operation and other things. So you understand now that we are going to see M2, US M2 money supply here starting to tick up again. And we should be able to see a better 2026. Let me know your thoughts in the comments, but I think Powell played it superbly. QT has ended. 2026 will probably be a record year for crypto and stocks, in my opinion, even though the argument of midterms and all of those things come into effect. 4-year cycle, I think, is gone. It's no longer there. In my opinion, if we're going to get an all season, probably the earliest I can expect will be Q2. The latest I can expect is Q4 2026. Smash a like. Very important video. Share it. And I'll catch you on the next one.